So today we're going to be discussing support and resistance, some basic price action concepts, trend lines, how to follow the trend, how to determine where the trend is, right, and what to look for the corrections that we have to look for in order to trade, right. So mainly we're discussing the structure of the market. That's the main purpose of this video. Right, we're not going to go much into the candlesticks and the deep stuff. So this is suitable for beginners. I actually created this so these notes, right, for a friend of mine that I was teaching, right. So that I was teaching some basic concepts, right. So this was just a summary of what I was teaching him. So yeah, if you're interested, if you're a beginner and you're interested in learning some concepts, what they mean, then stay tuned and watch till the end so that you can benefit the most out of this video, right. And you also, if you also want this PDF, right, I can share it as a PDF, right. Just comment that you want it in the comment section down below, and join my Telegram group, right, and I'll post it in the Telegram group, right, so that everyone can be able to view it, right. So but I will only post it after you've I only post it in the group when you say that you want it in the comment section down below, right. And to join my Telegram group, just click the links that says all links and go to my Telegram group straight, right. So what do we have here, right? So first of all, what we're going to be discussing is support and resistance, right. So a support and resistance, these are just for our horizontal levels, right. I didn't mention that here, right. These are just our horizontal levels. What do we mean, right? We are meaning that when our point of interest, if it is horizontal like this, then that's what I want to call a support area. You might want to call it supply zone or demand zone, right. Those are a little bit much deeper, right. And if you want me to teach more about that, just comment in the comment section again. But basically what you just want to know is that our support and resistance is just these horizontal levels, right. And these levels over here, right, what we need is just we just need one level, right. So like we just need this leg over here so that we can be able to draw our support and resistance, right. Let me just show you what I mean, right. So over here we just need maybe this point of interest or this point of interest. You can draw your support over here you can draw your support over here, you can draw your support, right. You just need this one area, right, and you'll be able to draw your support levels, right. So a support is the lower level, right. It's the price, when the candlesticks are above, right, our area of interest, right, and they pull back to that area of interest, right. So the support is the one that's below over here, right. When the market is coming to it, right, going down, right, this is where the support is. That's what we want to call a support, right. So when price reaches a support level, what you have to first anticipate in your mind is, first of all, is you are going to buy. You are anticipating what? A buy, right. We haven't gone much further into the detail, right, but what you have to keep in mind is that when the market is approaching a support level, right, we have to buy, right. That's what you have to keep in mind only, right. And you can just know what a support is, right, to know that you are reaching an area of a support. Just knowing that it's a support area, right. When you're supporting something, it's so like you're lifting it up, right. So obviously when the market is coming down, right, you're anticipating to lift that thing up, right. So that's why we are so like buying, right. We are supporting something, we are lifting it up, right. Then that's just for the general support and resistance, right. And for support and resistance, sometimes we can have a W, right, but the W patterns, don't trade them, right. Why? Because they are not that profitable, right. So support level, this is a support area, but if it's like this, right, when the market is just reacting off the same level like this, don't use that, right. Don't use that, especially if you're a beginner, you're not experienced enough to trade these W's, right, because most of the times these W's, they can just do a fake out, they can go down light and then maybe past that a little bit, or the second leg can be lower or higher. It's not consistent. If you are looking to be consistent in the markets, don't trade this type of support and resistance. But what do you have to trade instead, right? What I want you to trade is this zone flip, right? So this is also a support and type of a support and resistance, right? Over here, this is a zone flip. This is what I like to call a support and this is what I like to call a zone flip, right? Or a flip zone. I use it interchangeably. I don't know why my mind is just like that, right? But this is what a flip zone over here. Right? So what is a flip zone, right? So this area over here, right? So I think let me first start by discussing what a resistance, so that this can be a little bit easier for you to understand, right? So a resistance is just the opposite, right? So for a resistance is the upper level over here when the candlesticks are below our area of interest and they are coming up to it, right? So this is a resistance. When you are resisting something, it's so like you are pushing it down, right? So we anticipate what? We anticipate to sell when you see a what? When you see a resistance area, right? So that's what a resistance is. And again, for the aims, don't trade the aims unless if you're experienced, right? But if you are still a beginner, don't trade this type of these types of setups, right? What I'm going to show you what you have to trade instead, right? So over here, as we can see, the market is trending what? Is trending up, right? So how do we get our entries over here, right? So first of all, what you have to look for is a break of this resistance over here, right? So as you can see over here, when we go up, we pull back, right? This over here becomes our resistance zone, right? So draw a resistance over here, right? And as you can see, when the market is going up, it doesn't respect this, right? It doesn't create an M, right? That's the other reason why I don't want you to trade this, right? It doesn't create an M, rather it breaks past that area, right? So this is a broken a broken resistance, right? And when the broken resistance, when the market pulls back to that area, it now acts as as a support, right? So a broken resistance becomes a support when it's broken, right? When the market comes back to it, sorry, right? So when the market pulls back to that area, we're going to be anticipating our our buys, because now it's now it's acting as a support area because this resistance was broken, right? So that's the same thing that we have to look for on the resistance also on this side, right? When we're going down, when we're looking for our sales, right? The market was going down, reacted to this area, right? The market goes up, so this becomes our support level, right? When the market pulls back, it doesn't create a W, no, right? It breaks past that area, and the broken support level becomes a resistance. So when the market pulls back to that area, we're going to be looking for our sales, right? And I'm telling you guys, this is what I'm telling you. This is the sweet spot, especially if you're trading boom and crash and all that, right? It's the sweet spot. You just look for this pattern alone, right? And you'll be able to, I don't know, you'll be able to get sniper entries, right? Not sniper, but you'll be able to get good entries most of the times, right? Of course, it doesn't work all the time, right? There's no strategy that's 100% perfect, right? So that's about it for support and resistance, right? But of course, support and resistance isn't enough to trade the market. You won't get as many entries as you'd want and stuff like that, right? You won't be able to confirm some things, right? So that's when the trend lines come into play. So trend lines are just our diagonal support and resistance, right? So this is just the same thing as we were talking about support and resistance, right? That when you are approaching the market, when you're approaching the area of interest from below, right? From above, sorry, we anticipate to buy over here, right? And the same thing when we're approaching the area of interest from from below, we're anticipating to sell, right? That's so like the same concept still remains, right? But the difference between a support and resistance and a trend line is this, right? For a trend line, in order for you to draw a trend line, you need a minimum of at least 2 points, right? So a minimum of at least at least 2 points, right? In order for you to draw, because you can't just use one leg over here, right? So let's say we've got we've made this structure over here. You can draw a trend line over here. Is it going to be like this, like this, like this? You don't know the angle of the trend line, so you need at least a minimum of 2 points that you can connect. If you connect this point and this point, you get that, right? So that's what you need on a trend line, right? So when the market is approaching that trend line, right, over here we anticipate to buy, over here we anticipate to sell. That's just, it's as simple as that, right? But of course, it's not going to be working exactly like this always, right? Sometimes it can miss a little bit, sometimes it can it can break, sometimes it can, all that stuff, right? So the same as we do for a support and resistance, right? So over here, as you can see, this trend line over here was acting as a what? As a support area, right? Over here, maybe with some structure like this. And so it was acting as a support, right? And when you break past that area, right? Guess what? This is acting as a broken what? Support, right? So when the market pulls back again to that area, we anticipate our sales again, right? So, but over here, what you have to know is most of the times we can have two entries, right? There are two entry types, right? The first thing that you have to look for is this over here. We've discussed this previously, right? So this is a support area, right? The market breaks past it, right? And when the market pulls back, it can choose not to go to the trend line, but just respect this zone over here and continue going down. So this is going to be your first entry. So like the first area that we're going to be looking for entries over here, right? And the second entry is this trend line over here, right? So those two mainly, right? If it breaks past this trend line and comes back, so like wanting to create an M, just let the trade go, right? There are many opportunities to enter the market, right? But these are the two things that you're looking for. Then in these areas, we're going to be looking for our candlestick confirmations so that we can be able to take our entries, right? So it's just the same as what we're talking about in support and resistance, right? So I think that's out of the way, right? So how do you follow the trend? As you can see, I'm highly against going against the trend, trading those M's and W's, right? So how do you follow the trend, right? I'm sure you've always heard this term, the trend is your friend, right? It's always best to trade in line with the overall market trend because you get more chances of making money and your stop losses are much smaller, right? And more defined, right? Because you are trading alongside the trend, right? So obviously your stop loss, right? So let's say we entered over what? Let's say over here. You entered over here, right? Of course, if you entered somewhere over here, your stop loss is just going to be in this area over here, right? Your stop loss is smaller compared to the potential gain that you actually have, right? So that's why I like trading with the trend, with the overall trend, right? So let me show you some examples, right? So what you have to do is obviously go from your higher time frame going lower, right? You can start by your daily chart, going to the 4 hour, 1 hour, and the 15-minute, right, for your entries, right? So mainly just go to the day to just look for the buyers, look at the buyers, and then you go lower, right? The 4 hour is mainly the time frame that we're going to be doing most of your analysis. The daily, you're just going to be looking for your trend, for the direction, the overall market bias, right? And then on the lower time frame, right, you can just look for more defined entries, right? And make sure that the trend on the lower time frame is also in line with the higher time frame trend. That's when you're going to be looking for our entries, right? So yeah, that's it, right? So how do you determine the trend, right? So in an uptrend, the market is always creating a series of higher highs, higher low, higher high, higher low, higher high, higher low, right? And the cycle continues like that. So just remember that it's higher high because it's higher high. This high is higher than this high. Sorry. So it's higher high, right? This high is higher than this high, and this high is higher than this high. That's why it's called a higher high, right? And then the higher low, right? This low is higher than this low, right? And the next low that we create is higher than this low. So it's a higher low, higher low, higher low. So it's a series of higher highs and higher lows, right? So that's just what you have to look for. Some structure that looks like this, right? And then that's it, right? So every pullback creates a higher low, and the chance to re-enter the market, right? So just remember that whenever the market pulls back, even if you're in a trade, like let's say maybe you entered somewhere over here, right? You entered for your buys over there, right? And then the market pulls back over here. Don't think that the market is against you or the market is a grudge against you. So like, don't be that emotional, right? Just know that if you hadn't entered also over here, also you are also looking for a opportunity to trade, right? You are saying, let the market pull back so that I can get an entry, right? So just remember that whenever the market pulls back, it's a chance for you to re-enter the market again, right? So even if you lose this trade over here, even if you don't get an entry, right, just know that the market will always have a pullback, right? So the market is always creating a series of what, higher highs and higher lows, right? So always know that you have another chance to enter again, right? So what do you have to look for in a downtrend, right? So in a downtrend, it's now opposite, right? So we are creating a series of what, lower lows, right? Because this low is lower than this low, this low is lower than this low, right? And all that, right? And then for the pullback is creating a lower high because this high is lower than this high, this high is lower than this high, right? And the series continues just like that, right? So again, remember, every pullback is another chance for you to re-enter. That's when you'll be looking for the zone flips that we were talking about, right? That's when you'll be looking for zone flips. It may be in between this pullback, there's a structure, you draw your trend lines. I'm going to be going further into that just in a second, right? So that's just what you have to look for, right? So what are the characteristics of a trend, right? So the market moves in waves, right? There are impulsive and corrective waves, right? So the impulsive are the larger moves, right? The candlesticks, you can see that the candlesticks are larger, right? You be able to see this, right? And they are faster, right? So this over here, this is what we want to call an impulsive move, right? And then this over here is the correction. So the market moves in waves: impulse, correction, impulse, correction, impulse, correction, right? Those are the waves that I'm talking about, right? And the corrections are usually slower, low momentum, smaller candlesticks, or consolidating, right? So that's what we're going to be looking for. I'm going to be sharing the structure that's over here in the what, below over here, right? So those are the opportunities to enter, right? The corrective moves, those are the ones that are providing us with the opportunities to enter, right? So what do we have over here, right? So the market makes an impulse, right? And this is what we were looking at. So impulse, correction, impulse, correction, impulse, correction, impulse, right? So these are the corrections that we were talking about, right? So these were the pullbacks that we were mentioning earlier, right? So as you can see in these pullbacks, we just don't want the market to pull back straight like that, right? But rather what we want is the market to pull back in a consolidating manner, right? This gives us more chances to enter, right? Because if it's in a consolidating manner, you can draw your trend lines, you can have your breakouts and all that stuff. I will go. If you want me to create more, I will actually create more on this so that you'll be able to understand, right? So this is what we're going to be looking for over here. You draw your trend lines, right? And make sure that the pullback is in a make sure that the pullback is in a corrective manner, is in a consolidating manner, like, right? It's not having those high momentum candlesticks over there, right? So make sure that that is out of the way. Make sure that that's how you enter, right? So this over here, I'm just showing you, these are some notes that you'll be able to use. So like I mentioned that the impulse is in red, the correction is in what? So like this green, is this green or it's blue? I'm actually a little bit colorblind. I'm always having an argument with my siblings because I'm seeing my colors of my own, right? So whatever, but just know that it's green to me, right? So for your entry opportunities over there, that's when you're going to be using those trend lines in yellow, right? And support and resistance in green. No, it's black. Support and resistance in black. I think I'll edit this before I share it to you in the Telegram group, right? So over here I'm going to be inserting what is black over here. So for your support and resistance, as you can see, the market can pull back in a corrective manner to this zone over here, to this zone flip, right? And you can get your entries, right? So that's how you have to look for your entries, right? So for the continuation patterns, right? So the continuation patterns, these are the continuation patterns, these pullbacks, right? So what do you have to look for in your continuation patterns, right? So first of all, they are what we call flags, right? This is a flag, and this is another type of a flag, right? So the flag can have, so like can be, what do you want to call it? So like equidistant, like, so like it can be a nice flag, or it can go so like a little bit expanding, right? A little bit going a little bit wider, right, as it goes, right? But it's just the same concept, right? In fact, whenever you see a pullback, it doesn't matter the shape of whatever it is, just know that it's a pullback, right? just know that if the pullback is in a consolidating or corrective manner, that's what you have to look for. Don't care about if it's a flag, if it's a wedge, if it's a whatever it is. Just know that what you have to look for is your entries. That's it. That's the bottom line. That's what you're looking for, right? So there are these continuation patterns over here are usually after an impulsive move, right? So these are the corrective manner that we were talking about previously, right? So yeah, that's what you have to look for, right? So over here you can get your entries on the breakout. You can enter either on the breakout, right? Or you can wait for a breakout and the retest of that trend line, just the way that we're talking about how we trade trend lines, right? But what you have to look for is these structures. This structure is what's most important, right? The structure followed by your psychology, of course, right? Those are the most important things, right? So over here we can also have so like when the wedge, these are what we call wedges, right? So remember a wedge, like a cheese wedge, right? So over here, as you can see, the market is what, so like if you draw your trend lines there, so like narrowing to the end, right? So of course over here we're gonna have a breakout at some point, right? Over here, as you can see, the market cannot continue to move inside this structure because as you can see it runs out of space, right? So it cannot keep on bouncing over here, so it will eventually have to break out, right? So if you are in a strong trend, right, of course it will continue trending downwards, right? And then rarely at sometimes it can make a reversal, but usually what it does is this, right? Usually what it does is, let me show you in, so like let me just draw an example for you, right? So usually what it does is this, or you can have what, a strong what, push to the downside, right? And you have what, so like wedge forming, right? Oh, don't mind my drawing skills, right? And then over here, so like if what, if a wedge, right? What it usually does is this, right? Over here you can have what, a breakout, right? Continuing down to the overall trend, right? And then after this, that's when you can have another what, push to the what, to the upside. So usually this move is usually guaranteed, especially if it wants to create its what, W or M, right? It can just break past it, right? Equal to this or break past it a little bit. Usually it breaks past a little bit and then continues going up, right? So these structures, you have to keep on looking for them in the market when you're trading, right? So yeah, I think that's it for this video, right? If you like the content, like, subscribe and share, and remember, you are the bridge between where you are and where you want to be. Peace.